If you've invested in a qualified opportunity fund, you or your accountant needs to know how to file IRS Form 8997. This form is essential for reporting your QOF investments to the IRS, and getting it right is crucial for maintaining your tax benefits. In this video, I'm going to show you how to fill out IRS Form 8997 step by step. I'll cover who needs to file it, what information you need, and when it needs to be filed. Plus, I'll cover some common mistakes to watch out for. I'll also touch on what OZ investors need to do with the related Form 8949 as well. Whether you're new to opportunity zones or if you have multiple QOF investments spanning many years, understanding this Form 8997 is crucial for staying compliant and maximizing your tax benefits as an opportunity zone investor. I'm Jimmy Atkinson, founder of OpportunityZones.com. I've been helping investors navigate opportunity zones since 2018, and today I'll make sure you know exactly how to file IRS Form 8997. Let's get started. Now, one quick disclaimer before I get going. I just want to mention that I am not a CPA, and this video is not professional advice. It's meant for general information purposes only. I would urge you to consult with a CPA if you need to file IRS Form 8997. Now, let's have a look. So here it is, IRS Form 8997, Initial and Annual Statement of Qualified Opportunity Fund Investments. But first, who needs to file this form, and when does it need to get filed? Anyone who defers a capital gain into a qualified opportunity fund needs to file IRS Form 8997. It gets filed annually with your tax return, and the first time you'll file it, it will be for the tax year in which you defer a gain or perhaps multiple gains into one or more qualified opportunity funds. For instance, if you deferred a capital gain into an opportunity zone fund for the first time in 2024, you'll need to file IRS Form 8997 with your 2024 tax return by your tax return due date, which for individuals would typically be April 15, 2025 or October 15, 2025 if you file an extension. Now, you need to continue filing this form annually with your timely filed tax returns for as long as you have shares or interests in a qualified opportunity fund. But before we start filling in the information on this form, 8997, we actually need to first account for the gain, and that typically is handled on Form 8949. By the way, there are some cases in which you'll need to use Form 4797 for Section 1231 gain or the sale of business property, and I'm going to touch on that special case a bit later in this video. But first, let's head to Form 8949, because that's really where everything needs to get started. This is where you report the gain and the gain deferral. So I'll walk you through an example now. And in our example here, I'm going to assume that we are going to use a long-term gain. You can defer short-term gains into qualified opportunity funds as well. But for our purposes here today, in this particular example, let's go to Part 2 of Form 8949 to report a long-term gain. And first of all, the IRS says if you're going to defer the gain into a QOF, you want to tick box F here. And then for description of property, let's say in this example, our taxpayer sold some NVIDIA stock. So we'll do sale of NVIDIA stock. Okay, date acquired. Let's say our taxpayer acquired it a few years ago, end of June 2021. And then the taxpayer sold it end of June 2024. So 3 years, it's a qualified, it's a long-term gain. The proceeds, the sales price, let's say the total proceeds were $600,000. And let's also assume that the cost basis then was $100,000. I think that's about what that stock did over that 3-year period there. The code from instructions here, you can leave that one blank. We'll use that in the next column. And then the total, or the next line, the gain or loss here, $600,000 proceeds, $100,000 cost basis, it's a $500,000 gain. Now, in order to report to the IRS that you're deferring this gain into a qualified opportunity fund, that's when you use the line below. And in the line below, what you'll do, first of all, is you're going to enter just the employer identification number of the qualified opportunity fund. And so what's the EIN of the qualified opportunity fund? You'll typically get that from the fund when you send in your subscription docs and wire your money. You may get it in a statement later. And you should definitely receive it in the form of some sort of tax document that you'll get from your qualified opportunity fund each year, either reported on a 1099 or more commonly on a Schedule K1. So in our example here, I've drafted up a sample K1 for a taxpayer, which includes a little bit of information about the Qualified Opportunity Fund, reporting to the taxpayer his interests in the fund and his capital contributions. And right here in Part 1, Line A is where you'll get the QOFs, partner identification number. This is a fake EIN, obviously, just for this example purpose. But this is the number that we'll want to put in right here in column A on the second line. And then we're going to leave these next few columns blank here. And then actually you could put the date. I do think you do want to put the date acquired right here. And the date acquired, I'm going to assume that the taxpayer acquired shares on December 1st of 2024. So as long as it's within that 180-day period from this 6/30/2024 date, then you're in good shape. If it's more than 180 days, then it's actually not eligible to be deferred into a qualified opportunity fund. Code from instructions, column F here, we'll put in code Z. That indicates that it is a qualified opportunity fund deferral. And then in column G, we're going to put the gain that gets deferred into this investment fund, into this qualified opportunity fund, is a negative number. So in our case, I'm going to assume you're taking the entirety of the $500,000 gain from the sale of your NVIDIA stock, and you're going to defer it into this one qualified opportunity fund in one transaction, just to keep things simple. So then this nets out to minus $500,000. And then if we scroll down here to the bottom, here's where you will add in the totals. So the totals down here at the very bottom, we're going to put in, this is 600,000 total proceeds, 100,000 total cost basis. We had a minus $500,000 in total adjustments. And then it all nets out to zero at the very bottom there, as you can see. So that is how you would report the gain that gets deferred through Form 8949. Now, finally, we're ready to start filling in Form 8997. And this is pretty straightforward. There's 4 parts to Form 8997. Parts 1, 2, and 3 basically net out to inform Part 4. Part 1 we're not going to fill out today because in our example, we're assuming that this 2024 tax year is the first year in which our taxpayer is making a deferral, an investment into a qualified opportunity fund. But if you did have holdings due to deferrals prior to the beginning of this tax year 2024, this is when you would fill out this information in Part 1 here. But in our case, this is our first year we're making this type of deferral, so we can skip to Part 2. And in Part 2, column A, we'll put in the Qualified Opportunity Fund EIN, which in our case was that fake 1, 3, 4, 5, 6, 7, 8, 9. Now, the date that the QOF investment was acquired, remember, was 12/1/2024. And then the description of interests acquired, you're going to want to put in a little bit of information about what it is that you acquired. And on our Schedule K1 here, it'll usually indicate to you, what your capital contribution was, and then what your capital interest in the fund is. So in this case, we made a $500,000 contribution, and we got 5% interest in this qualified opportunity fund. So back to Form 8997 now, we can put in 5% interest in, and I believe the example name that I used here was Acme QOF LLC. So we can copy this from Schedule K1 and put it in here, 5% interest in Acme QOF LLC. Okay. Now for special gain code, we're going to leave this blank. Although when we do a Form 8797 Section 1231 gain, we're going to use that special gain code. But typically, just for a pretty straightforward 8949 fill out, you're going to leave this special gain code blank here. There are instructions later on in this form that describe what type of gain qualifies to use a special gain code. So if your gain corresponds to any of these types of gain originations, a Section 1256 gain, a Section 1231 gain, straddles, collectibles, exempt by treaty, deferred gain, or if you're making an adjustment to your basis based on a 5-year hold, you would use one of those codes. But for this case, we're leaving this one blank. Column E is where you would report short-term deferred gain, but remember this was a long-term gain that got deferred, so we're going to put in $500,000 of gain that we deferred. We don't have a continuation sheet here, so we can leave that blank, but if you had more than 5 QOF investments and it didn't all fit on this, you can attach another form, a continuation sheet. And then we're going to put $500,000 is the total amount right here. Let's see. It asks you a question if you are a foreign taxpayer. We'll put no in this case. We can skip this question in that case. Move to part 3. If we had any inclusion events or any sales of qualified opportunity fund interests during the tax year, we would report it here. But in this case, we're assuming that is not what has happened. So then part 4 basically nets out everything from parts 1 and 2 and 3. So what did you start with in part 1? What did you acquire in part 2? What did you sell in part 3? And then part 4 nets it all out. Now, in our case, we didn't have anything prior to the beginning of the year, and we didn't net anything out with an exclusion event. So in our case, part 2 and part 4 are going to match. So we'll put in that EIN again, 12/1/2024, 5% interest in Acme QOF LLC. Special gain code is blank. It's $500,000 that we've deferred. Nothing from any continuation sheet. And then so the total amount that we have deferred at the end of the year is just that $500,000. Now this part 4, this information you have here in part 4 for 2024 should essentially be copy and pasted verbatim into part 1 at the top of your Form 8987 for tax year 2025. Okay, so what happens though, okay, and then one more thing is that you do need to report all of this on, if you're an individual taxpayer filing Form 1040s, you need to report this on Schedule D of 1040 as well. So for doing that, we'll go to line 10 of Part 2, long-term capital gains and losses, because you do want to use the box F line here, because that's what we checked. Those are the instructions. So proceeds, we had $600,000 in proceeds from that sale, $100,000 cost basis, and then the adjustments were the $500,000 into that QOF, and then that nets out to 0. So you just want to make sure that you net that out to 0 on your Form 1040 Schedule D. Now, let's do a Section 1231 gain. If you have gain from the sale of business property, if you sold your business, you would typically use Form 4797, but crucially, you still need to tie Form 8949 to Form 8997. So in Form 4797 here, to record the sale of business property, first we're going to go to line 2, okay? And then in line 2, we're going to describe the property. Let's say that you sold your business. So we'll do sale of my business, LLC. Let's say you acquired it January 1st, 2010, and you sold it 6/30/2024. Whoops, 2024. Gross sales price, we're going to use the same numbers as before. You sold it for $600,000. We'll skip depreciation. Let's say you had a $100,000 cost basis. So then your total gain amount is $500,000. Okay. So how do you report that you end up sending this gain into a qualified opportunity fund? Well, you need to use Form 8949. So actually we need to send this to Form 8949. And then so we do that by just typing in on the second line, QOF investment to Form 8949, okay? And then we're gonna write the amount deferred as a negative number in column G here, okay? So we'll just net out 500,000. This is in the case where you are deferring the entirety of the gain into a qualified opportunity fund. All right, so now we have basically moved that gain from Form 4797 onto Form 8949. So then in order to do that on Form 8949, again, if you're using Form 4797, it's a long-term gain. We'll scroll down here to Part 2. Again, we'll tick box F. And then the description of the property, what we're going to write is QOF investment from Form 4797. Okay. Now you're going to skip a few of these columns, but in column F, we're going to want to write code O, which I think just means other, a gain code that isn't handled by any of the other gain codes in the instructions. And the IRS does specifically say, write code O here in this case. Column G and H, we're going to write the amount as a positive number. So we're going to make an adjustment of $500,000. Okay, it was a $500,000 gain that we're basically adjusting or moving over from Form 4797. Okay, now the second line, you're going to do the same thing you did in the first example, which was let's write just the EIN of the Qualified Opportunity Fund, which again is 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, and then we can write the date acquired. We'll use the same date, 12/1/2024. Okay. And then in column F, we're going to write code Z to indicate once again that it's a qualified opportunity fund that we're deferring. Column G and H will be the amount as a negative number. So we're going to net out $500,000 as an adjustment minus $500,000 here in the total column. And then if we scroll all the way down to the bottom here, we can total it out. Okay, we've got basically minus 500,000 of adjustments here, and that nets out to 0 right here. And then one more time on Form 8997, it's basically just the same thing as before. We're going to put in that same EIN, okay, that we got from our Qualified Opportunity Fund. We acquired it in December of 2024. It's a 5% interest in Acme QOF LLC. Special gain code here. Again, in the previous case, you may recall that we left this blank. Now in this case, let's scroll down to the instructions again here. And you can see that we're supposed to use for a Form 4797 Section 1231 gain, we're supposed to use code B. So make sure that you put in special gain code B in this case for this one. That's really the only difference here though, between Form 8997 from our first example and then this example. We got 0 on the continuation sheet. We'll bring the $500,000 total down. We're not a foreign taxpayer. We're going to skip that part. We can skip part 3, and then part 4, once again, just nets out everything. And then in our example, of course, we're just assuming this is just a pretty simple one qualified opportunity fund investment made for the first time in 2024. And then special gain code B again, and then $500,000 is what you have at the end of the year. 0 out that column, and then enter the totals from column E and F, and you've got $500,000 there. So that is it. That is essentially how to fill out Form 8997 and a few other related forms. If you have a qualified opportunity fund investment, that is exactly how you report it to the IRS, both in the year that you first defer the gain into a qualified opportunity fund and then in all subsequent years as well. If you enjoyed this video, hit that thumbs up button. And to get more videos like this one, you can subscribe to OpportunityZones.com on YouTube. Just hit that subscribe button. Thanks for watching.